All right, let's jump right into this. Welcome everyone to today's explainer. If you've been tracking the, frankly, massive shifts happening in global supply chains lately, you already know that the companies quietly building the actual nuts and bolts of our modern world are seeing some really unprecedented growth. So today, we're taking a guided tour straight into the engine room of one of those heavy hitters, Kaynes Technology. We're going to unpack their FY26 financial results, but more importantly, we're going to figure out exactly what's powering this kind of massive scale. So buckle up, because we are lifting the hood on a seriously complex and incredibly lucrative operation. Now, before we start throwing big financial figures around, let's just ground ourselves in what Kaynes actually does. We are definitely not talking about your basic run-of-the-mill assembly lines here. We're talking advanced electronic manufacturing. These are the highly intricate, complex circuit boards that serve as the literal brains for everything from electric vehicles to aerospace communications. That deep, high-tech capability, that's the absolute bedrock of all the numbers we're about to look at. To make sense of all this data, here is our roadmap for today. We'll start with the output, looking at the FY26 financial highlights, then the fuel to see their diversified revenue, and finally, the mechanics, where we'll dive into their core infrastructure. Okay, Section 1, the output. Let's get into those FY26 financial highlights. You know, what really jumps out right away is just the sheer velocity of their growth. If we look at Kaynes Technology's net worth, and this is measured in millions of rupees, by the way, in FY25, they were sitting at a very healthy 28,373 million. But then in FY26, that number skyrockets to an incredible 47,271 million. I mean, that is a massive leap for a single year. When you see a jump like that, it tells you they aren't just, inching along. They are scaling aggressively and capturing a huge amount of new value. So how exactly does a company support a growth spurt of that size? Well, you have to look at the balance sheet, specifically their assets. For FY26, Kaynes commands a total of 68,940 million rupees in assets. But the really crucial part is how that's split up. They've got 30,467 million in non-current assets. So think long-term investments, massive heavy machinery, the big infrastructure. And then they've got 38,473 million in current assets, which is your inventory, receivables, and cash. It's a highly liquid, incredibly robust setup. Basically, they have the heavy metal to build the stuff and the working capital to keep the engines running white hot. Moving right along to Section 2, the fuel. Let's look at this diversified revenue engine. This right here might just be the most important takeaway of the whole explainer. This is how their revenue breaks down across different industries for FY26. The primary fuel, that's automotive, including EVs, bringing in 55% of the revenue. But look closely at how they manage their risk. 25% comes from industrial applications, 10% from the super lucrative aerospace and strategic electronics sector. Another 6% is medical, and the last 4% covers railways and IoT. They are definitively not putting all their eggs in one basket. They've built this brilliantly diversified engine that can weather a storm in any single market. To put that into perspective, that 55% automotive chunk means heavy-duty robotics, sparks flying, metal joining metal on a massive scale. But then, compare that to their aerospace manufacturing. That requires an entirely different universe of precision. I mean, building components for airplanes or outer space tech leaves absolutely zero room for error. And Kaynes is somehow operating flawlessly in both of these totally opposite extreme environments. And it actually goes beyond just cars and planes. They seamlessly build complex railway infrastructure systems, where, again, reliability is totally non-negotiable, right alongside advanced medical interfaces. Think about that for a second. When a manufacturer can shift from building rugged parts for a high-speed train to assembling the ultra-sensitive internal electronics for a life support monitor, that just proves an unbelievable depth of technical expertise. All right, Section 3, the mechanics. Let's dig into their core segments and infrastructure. Real quick, before we look at how the revenue divides up internally, let's just translate a bit of corporate jargon. The manufacturing world loves its acronyms, mainly OEM and ODM. OEM, or original equipment manufacturing, basically means a client hands Kaynes a finished blueprint and Kaynes just builds it exactly to spec. ODM, original design manufacturing, means the client comes in with just a problem or an idea, and Kaynes actually engineers, designs, and then builds a solution. As you might guess, ODM requires a lot more brainpower and usually pulls in a much higher premium. Keep those definitions in your back pocket for a second. Now looking at the revenue by segment for FY26, A massive 49%, so nearly half the whole operation, is OEM turnkey box build. That means they assemble the entire final product, literally putting the box together. Another 28% is OEM turnkey PCBA, which is just strictly assembling the printed circuit boards. But check out that 22% slice for ODM and product engineering. That is a remarkably healthy chunk of revenue coming from design-led manufacturing. It proves they aren't just a basic assembly shop, they're a legitimate engineering powerhouse. Of course, to handle that crazy mix of pure assembly and complex from-scratch design, you need serious infrastructure. And here's a punchy little stat to give you a sense of their scale. 22. Kaynes is running 22 distinct advanced manufacturing and design facilities. We aren't talking about one giant mega factory here, it's a distributed network. That setup is absolutely crucial because it lets them handle a really high mix of different products and easily scale their production volumes up or down depending on what clients need on any given Tuesday. And let's be clear, these 22 facilities aren't just, dusty old warehouses. These places are incredibly data-driven. Kaynes uses this whole design-led approach packed with smart devices, tablets running advanced analytics right on the factory floor, and really deep IoT integration. Plus, they are constantly upgrading. Their filings actually note that a brand new high-density interconnect PCB unit is going to be fully operational by July 2026. They are relentlessly reinvesting to stay on the bleeding edge of manufacturing tech. All of that cutting-edge tech exists to serve this next number, 500. Kaynes has a massive client base, catering to over 500 individual customers. And these aren't just local mom-and-pop shops. We're talking marquee, household name multinational corporations. When you have the world's biggest brands trusting you to build the sensors for their cars, the parts for their planes, and the chips for their medical devices, well, that's about the best validation of your quality control that you could possibly ask for. So let's pull the whole picture together. The Kaynes technology engine looks like this. Over 500 global customers, they're exporting and operating across more than 30 countries worldwide. They power all of this through 22 highly advanced, totally flexible manufacturing facilities, and the whole thing runs on a smart, design-led approach utilizing the absolute latest in IoT. This, right here, is exactly what a highly optimized, modern global supplier looks like. Which leaves us with this final thought. We've seen their incredible financial growth. We've looked at their deep diversification across automotive, aerospace, and medical. And we've explored the massive technological infrastructure making it all happen. So I'll leave you with this to chew on. As global supply chains continue to fundamentally shift and big brands scramble for more reliable, high-tech partners, how are highly diversified manufacturers like Kaynes going to continue reshaping the global economy? It's a huge question, and for sure one we are going to keep our eyes on. Thanks so much for hanging out with me for this explainer, and I will catch you guys on the next one.